Our first guest today, Hindware Home Innovation, reported a steady revenue growth for the quarter four. Margins saw an expansion on a year-on-year basis as well. The street likes that, as a result of which the stock higher. The profits were lower on the back of higher finance costs and higher depreciation as well. We have with us Sandeep Sikka, who's the Group CFO of the company, joining in. Thanks a lot, Mr. Sikka, for joining in. You had guided for 25% sort of growth come by in FY23. That's happened. Now, FY24, what kind of growth do you anticipate in terms of revenue, margins? And if you could break that growth up for us in terms of verticals.
So if you see, like last time, we had given a guidance of 18 to 20% growth. I think what we achieved is around 24, 25. From here onwards on sanitaryware faucet, which is our bath product, we see 18 to 20, 21% range growth, which is happening. There may be, on a quarter to quarter some headwinds, but this is a number which is on an annual basis. And similarly on the pipes business also, we are expecting a similar level of growth, maybe 20 to 25%, which may happen in the next 12 to 18 months. As far as the consumer business, which is the third big vertical, there we are seeing that the industry is having some demand issues, and it's not per se us, it is most of the other players in the market. They're also either facing, a growth issue or a margin crunch issue. But despite that, I think we had a growth in that business also of 16%. So when we try to compare that with other peers in the industry, it is not, I'll say, a comfortable growth, but we are expecting a much bigger growth. But maybe, there can be some patches, one or two patches, but on a medium to long term basis, on the consumer side also, we are very bullish on that.
Okay, all right. So that's the smallest part of the business, though, and that'll be a little softish. But Mr. Sikka, the market likes the fact that I think you've delivered your best ever quarter on the profitability front. So for the year, on the whole, give and take everything, at least 20% growth is what you should be looking at on this top line of around 2,900 crores. And also margins, do they start heading to mid-teens from here on? Give us a guidance on both the rough top line growth as well as margins.
So we had given a midterm guidance that on an overall consolidated basis, our margin should be ranging, EBITDA margins I'm talking, should be ranging around 14 to 15%. And we are still holding.
And for this year, what will it be?
This year, it should be in range of, 13.5%.
13.5%. And top line growth of around 20% doable?
Yes, doable.
All right. What's the current market share that you have in your pipes business with lower PVC spreads? I'm just trying to figure if there could be some sort of margin compression in your pipes business going forward. You have some capacity coming in there as well. That will take some time to ramp up. Just trying to understand how that business will pan going forward.
So this business, if you see, we started 4.5 years back. Now we are around 800 crores. We had given a guidance doing 1,000 crore business by 2025, which we feel that we should be able to do in the next 12 to 18 months time itself. So, but the market size, the potential market size of this whole plumbing today, we range somewhere around 15 to 16,000 crores. So, 1,000 out of 15, 16,000 crore of, market gives us a number. As a part of our business strategy, whenever, we launch a new business, we strategically try to see that we range between 5 to 10% of the market, for the new product segments we target.
So that would then mean that you are looking at around 1,600 crores in terms of a 10% market share of this 15 to 16,000 crore market. Just trying to understand by when do you get there? Because 1,000 crores comes in the next 12 to 18 months.
So 2 years back, in 2021, we had told market when we were at 400 crores, we'll do 1,000 by 2025. So I think doing 1,600 crores in next 4 years is quite feasible. And for this, we are adding a capacity. So we today have 2 plants in Telangana with a capacity of 48,000 tons. Now we're putting a plant in North, which is in Roorkee, which will have an ultimate capacity of 25,000 tons. So we are investing money. We are doing this capex in next 2 years so that we build this capacity because we see a good leeway of growth in this business.
All right. Just a quick question on your sanitary ware faucets business. How much of it is outsourced in this mix?
So in terms of sanitary ware, we do around 30% outsourcing. Okay. And on the faucets, we around 40-45%.
All right. And how does this move going ahead from 30 and 40%?
So we are working on a strategy that high value products we move inside the plant, and low value we outsource. And because that's we see, can also unleash another, 1 to 1.5% basis point on the margin. But that will be implemented over next 12 to 18 months period. So immediate benefits of all this will not be visible. So we are working on a number of initiatives internally, how to expand the margin on this.
Consumer appliance business, you said that, has faced some pressure. It's crossed the 500 crore mark in FY23. You were targeting 1,000 crores in this business by FY25 as well. So does that target stand pushed now? What can we expect in terms of growth in FY24?
Based on the current market conditions, I think we'll have to comment that instead of 25, that may be touching 27 now. Because this year we lost the growth on this business, although we have a 16% growth, but we were targeting around 25-30% growth here. Okay. I think another issue in the consumer side is that market is highly fragmented, and market as a whole has not been able to pass on the price increases on the input to the margin and to the end consumer. So if you see the results of the other peers in the industry, so either they have a growth issue or they have a margin issue.
Okay. All right. Just want to understand, Mr. Sikka, these gas prices are lower and a lot of sectors will gain. You as well are one of the beneficiaries of that. And is it baked into this 13.5% odd? Because, we are focusing on stocks like Gujarat Gas and other companies as well, which have cut prices. You're a beneficiary?
So we use gas while we make sanitaryware because you have to melt sanitaryware to 1500 degrees, and to make it a sanitaryware. But we got hit with the gas prices moving from almost 20 to almost 60 rupees last first half. We are talking about it. But now prices are coming down. That will also, unleash some margin into the game, actually, because we have taken the price.
So that's good news then. Final question on debt. It's around 710 crores approximately as of last count. You have some capex plans. What do you end this year with?
So I think we have given a guidance that we should be able to, pay off around 100 crores on this. We are working on a number of initiatives to reduce our working capital in the business. And one key initiative is insourcing. Right now we were importing many products from overseas. So we're just trying to see how we can localize it so that we don't face those issues of, holding the inventory during the, off periods in the overseas market. So plus we see that odd 100 crores we should be able to pay off in next 12 to 18 months.
All right, 100 crore debt payout with a 20% revenue growth and margins in low teens, 13.5% is what you're guiding for. The street likes that. Ahead of the numbers, the stock was higher by about 5%, but after your commentary, it's at the high point of trade with a gain of almost 8%. Thanks a lot, Mr. Sikka, for joining in. The street will hold you on to these numbers that you're giving. We will keep an eye out on the scale that you are gaining right now. With that,